right, we're getting ready to record. I want to thank everybody for the opportunity to be here today on the Legacy Farming and Health Group's third Thursday special guest speaker. Our life project has been able to be beneficial for a lot of people as we've been able to bring in some dynamic speakers. And so we have another dynamic speaker that's coming tonight that's going to speak with us on some things that we may hold dear and to ourselves and give us some opportunities and ideals to be able to utilize some of the things that he's talking about in the future on future endeavors and how we might be able to come together as a whole and participate in making sure that we're able to create the society and economies and stuff that will help us to be self-sustaining. So let me introduce to you guys Mr. Charles Whittier. Charles is an international trade attorney licensed to practice in New York, Texas, England, Wales, Bermuda, and Zimbabwe. He's a graduate from the University of London, the School of Oriental and African Studies. Charles has provided legal representations for companies throughout the world that are involved in global sales and transportation of goods. Mr. Whittier is also a litigator who has represented corporations involved in commercial lawsuits involving claims for millions of dollars, distribution rights for majority products and trademarks and copyrights. In the 1990s, Mr. Whittier was the exclusive importer and distributor of Zambezi Lager, the official export beer of the country of Zimbabwe. The product was distributed throughout the United States in retail outlets and restaurants and was the best-selling African beer in the United States between 1992 and 1997. Currently, in addition to his law practice, Mr. Whittier is advising clients on the legal requirements and mechanisms for raising corporate capital through the provision of the recently enacted Jumpstart Our Business Startups Act, the Jobs Act. In particular, this includes the investment vehicles of equity, crowdfunding, regulations A+, IPO, and Regulation D. Mr. Whittier is available to advise new prospective clients on the Jobs Act and the opportunities it may provide for their businesses to raise up to $75 million per year. Is that correct, 75 million?
That's correct.
Okay.
It was just enacted this year.
Okay. For more information, his contact information, phone number is 917-699-9197. I will put that in the chat. And so Mr. Whittier and I, we've chatted for a while for past few weeks and stuff, and have just talked about the opportunities that the crowdfunding may have for our community. One of the things that I wanted to reiterate with him is the fact that I think it's important for our community and our people to really understand what crowdfunding is, and so that they can be able to make a sound determination. Is this something that we want to get into? If it is, how can we utilize it, and what are the best practices in doing such? And so with that being said, I'm going to introduce to you Mr. Whittier, present to you guys. And so Mr. Whittier, here's your opportunity to step in and impress us all. How are you doing today?
I'm just fine, sir. Thank you so much for inviting me to address your business group. I really appreciate it, John. As you read out just now, my name is Charles Whittier. I'm a corporate and international trade attorney. And as part of my practice, I advise and represent clients that are raising funds through methods of equity crowdfunding and Regulation A plus IPOs. And that is basically by issuing shares or other securities in their companies to the public. Now, I'm not going to try and bore you with a lot of legalese and regulations and so forth that really only the lawyers need to worry about. I'm going to give you the overview so that you can understand how this is going to be such a great benefit to you and your company or your business, because it opens up the way it hasn't been done before since, anyway, 1933, the ability for the public to invest in a private company without the SEC really imposing strict regulations. One thing I do have to say, though, however, is because I'm an attorney, this presentation is not legal advice, and there is no legal client-attorney relationship existing between myself or my law firm and the persons attending this Zoom meeting. The information provided is only to be considered as an introduction to the investment method known as equity crowdfunding, and is only to be disseminated to the members of the Legacy and Farming Health Group Life Project. If any members of that group wish to contact me to discuss more details on this presentation or to receive legal advice, they may contact me at the number indicated at the bottom of my biography, which James read out to you. So that having been said, the concept of equity crowdfunding was basically germinated and grown through the legislation known as the Jumpstart Our Business Startups Act, the Jobs Act of 2012. This legislation, interestingly enough, was enacted by the Barack Obama administration as a method to allow emerging growth companies to solicit for funding and investment from the general public as well as accredited investors. Now, the reason it is geared towards what they call emerging growth companies is because that is defined as a company that has earned a gross profit of less than $1.05 billion in the last fiscal year. So that basically encompasses most corporations that are not in the Fortune 500. And it allows for many companies anyway to be able to utilize this methodology to get funding from this, what is essentially a broad base of your clientele, your consumer base, the people who would ordinarily use your products or services. So as I say, the emerging growth company is a company that has not earned more than $1.05 billion in the last fiscal year. And another term that you need to be familiar with before I go on is what an accredited investor is. An accredited investor is an investor who's considered to be sophisticated. That's also another name they use. And that investor, according to the SEC, is able to evaluate the true value of securities that may be offered to them. And so I don't know how they come up with these limitations, but basically an accredited investor is one who has earned over $200,000 annually in the past 2 years, or $300,000 if you count your spouse, and I guess you're declaring jointly, and you are over $1 million in net worth, excluding your primary residence. All right. So that would be an accredited investor, and that would include high wealth individuals, institutional investors, that is obviously insurance companies, other corporations which invest their members' money in order to ensure that they have enough capital to cover their liabilities, union funds, etc. Then you have unaccredited investors, and unaccredited investors are those investors that fall below those limits, and that would be your ordinary working public. So as I said, it's the Jobs Act that instituted the equity crowdfunding mechanism. And this first came about in 2015, and or rather 2012. And in 2015, the Securities and Exchange Commission, which regulates the Jobs Act as it relates to the issuance of securities to the public, they adopted a final ruling which set out all of the regulations for equity crowdfunding, and also Regulation A+, which I'll get into a little bit later. But I think equity crowdfunding for this group is more important because it basically allows you to solicit funds from the general public up to $5 million a year, selling securities, that is shares or preferred stock, debentures even, which is debt, in your company to the general public while still remaining a private company. Whereas all the companies that you see on the stock exchange and talked about on TV, they're all public companies. And they have different rules and regulations that govern how they are regulated. So in other words, let me just say that the fact that this law was incorporated or enacted by the Obama administration was in order to try and level the playing field between ordinary, or rather, yes, ordinary emerging growth companies and those larger corporations that always had access to capital. I'm sure that everybody who's listening to this presentation knows that before 2015, generally speaking, the only real way to raise capital for your company or business was through a bank, venture capitalist, personal savings, credit cards, family, friends, that sort of thing. You could not go out to the general public and ask them to invest in your company unless you were registered with the SEC and had an initial public offering. There were some exceptions, but that greatly reduced the number of investors that you could have to under 50. And they had to be accredited, which meant that they were high income individuals. So in other words, what was going on was if you did not have contact or a source of great income to invest in your company, you had a bit of a problem. You were unable to expand. You were unable to bridge unfortunate business cycles. Something happens in the greater market, and like the pandemic, and you need to be able to pay staff or restock your inventory or whatever, and you were unable to do so because you did not have access to capital. And I mean serious capital, millions of dollars, which will enable you to not only take care of extingent problems, but also to grow from your present situation and be able, therefore, to have a better credit and economic profile in the general market. So now, regulation crowdfunding allows you, as a small company, to solicit funds and raise capital just like a large, well-established corporation. In addition, the rise of the internet and viral media campaigns allows the emerging corporation to project itself to very many people who could be and would be potential investors. So that instead of perhaps having a handful of investors and you needed, say, $3 million, you got a handful of investors who are each putting in $250,000. Each of those investors is quite anxious to make sure that you do exactly what they want you to do. They want people to sit on your board of directors. They want to be able to have you establish certain procedures as far as how money is utilized once it's brought in. And first and foremost, they want to make their return on investment. So a lot of money that might have gone back into a company in order to improve its capital structure and its ability to make a profit has to go to the venture capitalist first, or at least in some substantial way to them before the company is able to use the rest of the dollars. So that creates a problem that equity crowdfunding overcomes, because you're going to have a broad swath of investors in your company. And these are investors that you will be able to solicit and appeal to through a equity crowdfunding platform. Now, the equity crowdfunding platform is a internet-based website where your company is being featured, and its requirements for investment are being showcased. And all of the information that an investor, a savvy investor, would be able to get in terms of what your share capital that you're distributing is going to be, who your board of directors is, what your financial status has been over the last few years, all kinds of pertinent information, what you think your market is, how you plan on permeating that market with your product or service, and your future growth projections. All will be available to that investor on the platform. In addition, most companies put out something akin to an infomercial on their corporation on that equity crowdfunding platform, so that besides the raw data that someone will want, which is contained in your Form C registration with the SEC, they'll be able to get a very nice presentation with interviews by people, with visuals that will inform them as to what your business is on that website, which they can view many times. And this will enable them to decide whether or not they want to invest in your company. Now, because you're going on the internet and you're trying to get investment from a large group of investors, you really don't need to have more than a $300 minimum. Sometimes they have $200 minimums, but say on average a $300 minimum investment from every investor, because you're looking to get hundreds, thousands, millions of investors. Now, this has a great benefit for you as a company, because essentially equity crowdfunding is raising capital from online investors, as I say. So that means you're not beholden to 1 or 3 or 5 very large investors who are trying to change and alter the way you do business, or on your board of directors, causing you all kinds of pain and consternation, but rather the people who have invested in you, they have a very good feeling and understanding of what you're doing, and are prepared to put in what is essentially a small amount of money individually in order to invest in your company. What you're trying to do is leverage your appeal to a large or wide range of investors. That's what this is all about. Now, what are you giving forward to these investors? Well, equity crowdfunding, it's a bit of a memory, is the sale of securities. That is, you're selling what are the equity divisions or the equity pieces of a company. So that's common stock, preferred stock, sometimes debentures, as I say, debt. You can have voting, non-voting shares. It really depends on you, the entrepreneur, how you want to set it up. And you also determine how much you're willing to raise. Now, with equity crowdfunding, as of March of this year, the maximum amount you can raise in any one year is $5 million. And that went up from 1.7 million. So that was a substantial hike. And within that $5 million range, $1 to $5 million, you have some nuance, in as much as if you're trying to raise less than $100,000 in this way, you don't even have to get an outside accountant to verify your financial statement in order to get on the platform and raise the capital. When you go above 100,000, then you need to have that accountant come on and verify your accounts. And when you go from 1 million up to 3 million, I believe it is, you have to, and it just changed, so excuse me, I can always give you the exact number, but in other words, you get up to about 2 to 3 million, you have to have your financial records audited. But then again, you have to understand that's because you are offering your business, an investment in your business, to the general public. Now, another part of this is that equity crowd funding still keeps your company as a private corporation. That means that you are not listed on a regular public exchange, but there are alternate exchanges that you would be able to go on to sell your shares. And that would mean that your shares that you're selling to the public have a degree of liquidity. And that's very important to an investor, because someone buys shares in your company, they go, well, if I need to sell it because I've got a medical emergency, or I want to redo my house or something like that, and I really could do with the money, what am I going to do? Most of the time in the past, you invested in a private company, you have to wait till that company wants to buy those shares back from you, or is engaged in a merger and acquisition where it's acquired by another company and they offer money for your shares. But in this case, when you do an equity crowdfunding offer, then you can list the shares that you have just issued to the general public on a ATF, an alternative funding exchange. And that's something else that I can explain in more detail privately to anybody who wants to know, as that may be getting into what you call legal advice. But in any event, know that there is liquidity in these shares. So what are the benefits of regulation crowdfunding? Well, as I said before, one of the big benefits is that you are able to raise funds from the general public. So you're going to spread out the number of people who are actually investing in your business, and in that way keep control, minimize interference, and also what's very important is you are building a cadre of ambassadors who are interested in spreading the word about your business, because now they've invested in it, and if they're getting dividends paid because you took the money that you raised and you were able to increase your productivity and your profitability, and now you're paying them a dividend on the shares that they bought from you, and the value of those shares has gone up 10, 12, 15%, which is well above anything they could get by putting that money in the bank, they're going to tell other people about this. They're going to say, this is a great opportunity. This is something that you should get on to as well. Now, you can only raise up to $5 million in any 1 year. But the very fact that you are doing successful raises of capital when you do offer issued shares usually means that there are many more investors who wanted to invest who are unable to because you reached your limit. So there's nothing better than having an enthusiastic investor who might have missed the boat and is very anxious when the next time you have a round of investment capital raise to get involved. Okay, so I already explained that equity crowdfunding is the sale of securities, which is very different than the donation crowdfunding, which you may be familiar with, GoFundMe and some of these other platforms where you have an issue or a problem where you're trying to keep a building from being destroyed because it has historical significance, or a number of things that you can think of. Those are donations. You may offer something in return for that donation. Perhaps if they're keeping something alive, or it's a museum, those who have invested can always come to the museum for free, or you're giving some small gift card for every $100 or so of investment. But with regard to equity crowdfunding, you are actually selling securities, just like any other corporation. That is stock in your company. Now, another benefit is that you, as I say, dictate the terms. You can decide the minimum limit that you want to raise as well as your maximum. And the benefit or the real beauty of setting a minimum is that should you, excuse me, fail to reach your maximum, which say was $1 million, but you're only able to raise 250,000. If you set your minimum at 200,000, once you hit the 200,000, you can keep it. If you set a lot of people set low minimums like $10,000, but what you want to do is actually make a realistic dichotomy between your minimum raise and your maximum raise, so that people think it's not that you're just trying to raise money to be getting money, but you have a very legitimate use for it. So when you make your pitch for investment on the crowdfunding platform, you're going to be showing the investor, look, we need this much money because we need to improve our machinery. We need to increase our warehousing space. We need to ramp up our marketing. And it's going to cost us at least this much to do that. So if it's going to cost you 200,000 to do that, and you're trying to raise at least 3 million to make sure you cover that and then some, you wouldn't want to say your minimum is 10,000 because it's not going to appear genuine. Obviously, you need a lot more than 10,000 to meet your objectives. So a lawyer will help you establish proper parameters for your minimum and your maximum. And often the crowdfunding platforms themselves have experts that you can refer to assist in making sure that your offer is as appealing as possible. And my firm actually acts on behalf of companies that want to go into equity crowdfunding in the way that they negotiate and deal with the crowdfunding platform itself. So the benefits of the platform to their fullest extent are made available to the client. Also, as I said, you remain a private company under equity crowdfunding. So it's not an issue where you have to suddenly say, okay, well, we're a public company, and maybe we start getting someone trying to come in and buy up a lot of shares and become a majority or near majority shareholder, or sending out green mail to our other shareholders and causing us a lot of internal problem. No, with equity crowdfunding of this type, $5 million per year limit, you are still a private company. So that is basically the benefits of equity crowdfunding. You're able to determine how much you need, and there is a mechanism for you to go and get it from a large section of the public without having to worry about making a presentation to just a couple of people who make the final decision as to whether or not you're going to get your money. And if it doesn't work with those few people, well, that's just too bad until you can figure something else out. This has become a very, very popular method of raising capital. And I'll just give you one example. Just today, it was announced on Bloomberg.com, the financial news network, that an equity crowdfunding group of taxi drivers has raised $100 million in order to compete against Lyft and Uber by putting their own cars out on the streets, owned by the drivers themselves in a cooperative, and promising to pay the drivers more and charge the public less. So that's a very good example of how you can use this to get into the game and challenge an otherwise very well-funded competitor. just one moment. I'm just going to return to my outline. So if you are interested in this, you would ask then, how do I proceed? What do I do next? What is the launch process? Well, with equity crowdfunding, as I say, you've got to get on a platform. And there are certain platforms which have been licensed by the SEC, and they are allowed to hold the information, the presentations, and all of the other apparatus for soliciting the public for funds. And this is in order to protect the public from unscrupulous operators who may be putting information up which is not accurate, or they have no intention of utilizing the funds for the purposes that they state. So this is a way for the SEC to still provide a security function to protect the general public. So in order to launch a equity crowdfunding campaign, first the company files a Form C with the SEC. And this Form C lays out all the internal workings of the company from the corporate perspective. That is, who the owners are, how long it's been in business, the board of directors, other information about its tax filings and so forth. Now, some people may say this is intrusive, but every venture capitalist, bank, or other formal lender will ask you for the same information. And they're going to make their decision solely on that information, whereas the SEC is looking at that information really just to establish that the company is functional, that it has a profitable business plan. And when I say profitable, sometimes you're not profitable per se in the last 2 or 3 years. You may have only broken even or had a small loss after all of your liabilities are covered for overhead. But that's still a viable business. That's just the kind of business that's going to be looking to raise capital, because obviously there's something within the mechanism of that business that needs some capital to shore it up. And once that happens, it will be profitable. So the SEC is just going to look to see that the company is actually formally functioning as a real corporation. The form involves, as I say, basic disclosures, information on key executives, the company's business plan and use of proceeds, and the terms of the offering. So that means, what kind of shares are you offering? How many? What is the value of each of those shares? The form is public and can be found in the SEC's EDGAR database. So in other words, in that way, you are acting like an IPO company. That is, you're asking the public to invest in you. Well, the public can find out information about your business. For the first $107,000 of the raise, and that's what they call your attempt or your offering, a raise of capital. For the first $107,000 of the raise, the business owner can sign off on the legal and financial paperwork without using outside services. So as I said before, you wouldn't even really have to hire an attorney or an accountant if you were only going to raise up to $107,000. However, to raise between $107,000 and $1,070,000, which now is up to $5 million, businesses must bring on an independent CPA to review their financial books for the past 2 years, or since the business's data of incorporation, if that was less than 2 years ago. So in other words, you don't even have to have 2 years of full financials. You just have to have a good business plan. You just have to have a way of showing that your business has legs, it has wings. There's a consumer out there that wants your product, and that you are ready, willing, and able to utilize the money that you raise to market and sell to that consumer. So in other words, once you get into the higher numbers though, you would want an attorney or an accountant to help you to fill out Form C properly, make sure that everything is in order, consult with the accountants to make sure that the financials are accurate, and that when you do file your Form C with the SEC, you have a very good or perfect chance of it being accepted. Once it's accepted, that's when you can offer those securities. Now, there's one other very good aspect of equity crowdfunding that I just want to state to you, and that is the new regulations allow you to have an early offer, not an offer, but rather a presentation of the shares to accredited investors. So if you have a cadre or a group of accredited investors, that's high value investors earning $200,000 a year as an individual, $300,000 as a couple, or they are have a net worth of $1 million plus in the last, which does not include their primary business residence, then those people you can actively solicit early to get an idea of what they think of your offering as a whole. So in other words, you can get in touch with brokers, that is regular stockbroking agencies and underwriters, who will allow you to make a presentation to some of their investors. They're the people that they have on file who are always looking to invest, and see whether or not they believe that the shares that you're about to issue and the business that you're trying to capitalize is worth the effort and the money. That goes a long way to help you decide whether you want to continue on the path of equity crowdfunding, or whether there's something you need to shore up in your business or your presentation or something along those lines before you go all the way out to your filing with the SEC and spending the money required to do that, and then getting up on the platform, because the platform will always ask for a certain amount, usually about 3 to 5% of what you raise as their fee for being up on the platform. So they also are scrutinizing your business plan and what you plan on soliciting to the public as your business, because if it doesn't look like it has legs, they don't want to bother putting it up on the platform to, be something that isn't successful. So I hope that's a fair overview of equity crowdfunding. I've given over a lot of information, I know. This was a presentation I was asked to do at relative short notice, so I don't have visuals like PowerPoint to put up on the screen for you, but I'm more than willing to answer any questions now, or if you give me a call, I can go into any depth with you about how equity crowdfunding can really help your business raise capital without having to go to the usual sources that are most of the time denying small business capital in the first place. So, John, that's my presentation, at least initially. If anybody has any questions, I'm willing to take them.
All right. Well, thank you. That was an excellent presentation. I had about 3 or 4 questions that I had written down, and you answered the majority of them. And let me see if I can pull up the ones I was writing down. Let's see. We talked about how the investor gets their ROI. One of my main questions is U.S. capital, is that the only resource that you can use for crowdfunding?
No, it isn't. You can get investment capital coming from anywhere in the world. The only requirement is, though, that the company that is issuing the securities must be a U.S. company.
Okay. What about cryptocurrency?
Cryptocurrency is allowed. The only thing is that, you have to get up on a crowdfunding platform.
Right.
And there's only a few of them. And so as far as I know, there's only one that's really even trying to deal with cryptocurrency at this point, because it's just such a new phenomenon, and they have other liabilities and potential
I understand.
problems that they
Yeah.
want to try and avoid.
Yeah, when you have Bitcoin that goes from 60K to 30K in less than 30 days,
Right.
yeah, it's hard to put that in. So I was just something that I was wondering about. I want to let's see, we have Gabriel who has his hand up. Gabriel, I saw you had put a question in the chat. I was going to ask that for you, but I'll give you the opportunity to ask it yourself.
All right, I appreciate it. Then I'll ask two questions while I have the floor. First of all, Charles, thank you so much for coming on board, man. This is some really great information. It's something that I definitely want to think about some more. I'm going to research some more. But while I have you on the hook, I'd like to ask you a couple questions. The first one was one that I put in the chat. Do you have like an example of a company that might have gone through this equity crowdfunding that maybe is a company that we may all know that's still private but is not on the SEC or is not?
Yes, I do. If you just give me a second, I don't know how much time you've got. I know in my file I have a few. Just one moment, if you can just.
Sure.
But there are a number that have gone through this.
Okay.
There is one that I can think of offhand, and they went through Regulation A+, and I didn't really go into Regulation A+ for the reason that is when you're actually taking the company public, and you have to go up to or beyond the $5 million mark. But you may be familiar with the Chicken Soup franchise. They do books and they do anecdotal films and so forth. It's kind of like it's hard to explain. Are you familiar with Chicken Soup, that franchise?
No, not at the moment. I'm not.
Okay. If you Google it up, you'll see. Basically, they've done a lot of books. It gives homespun advice and also other practical matters to encourage people to be positive thinking. And they do children's books, and they do recipes. They do a lot of different other things, and they were pretty popular. So what they did is they went out and they raised $50 million with a Regulation A crowd fund, which is basically the same as what I explained, only instead of a Form C, you file a Form S. And they were making their securities offering onto the NASDAQ. Okay, once they got funded, they went up on the NASDAQ, and they were able to utilize the funds to expand their ability to participate, if I'm not mistaken, with Amazon or Netflix in some kind of program to promote their books and have them made into video presentations, movies, programming, et cetera, et cetera. I think the better course of action, because I can't seem to find it as I'm looking around, I will send through John a couple of examples of successful equity crowdfunding cases, and he can distribute it around to everyone. There are a few. There are not a lot, because this has not been in existence really prior to 2015. And it's like anything else, it takes a while for the public, the investment community, and so forth to really get on top of it. But it is starting to pick up steam like a snowball going downhill. And as I said, just this morning, you did have that successful equity crowdfund of the cab or livery drivers in New York City who are going to challenge Uber and Lyft. And they went through an equity crowdfund for 50 million. Sorry, 5 million.
Awesome. Well, I appreciate that. I'll definitely take a look at the Chicken Soup company and learn a little bit more from what processes they took. My second question was, what if you're not, so what if you're a small company that you may not have a board and all those other entities that the SEC might be looking for? Is it best to wait until you establish those sort of those sort of areas of your business?
Corporate apparatus.
Yeah.
Well, yes and no. What you want to show the SEC is that if you raise this capital, do you have the corporate staff, board of executives, etc., to actually utilize the money properly? Or is it going to be an investment that has got a chance of success, or is it going to be is money that's people are just throwing down the drain? So if you have a business, say, that you've been running on your own, and you are profitable, and you need a certain amount of capital in order to take it to the next level, that's good enough. You don't have to have anybody else in there with you.
Okay.
Now, a lot of times, it's just the way people are. You know, they expect certain things. So if you get someone who's on your board as a treasurer, okay, and they are the one that handles all your financial affairs, and if the SEC or anybody else wanted to get in touch with your company concerning their tax returns or financial statements, they would contact the treasurer. That makes sense to them. That looks like a formal corporate structure. Say there's a vice president. I mean, these people don't have to really be anything more than perfunctory functionaries in your company. Maybe they have 1 or 2 shares. You basically pay your accountant every year to look at your books, but you say to your accountant, can you also serve as the treasurer of my company? That's what I'm talking about. You know, you just put a formal corporate facade up front, and it just makes you look a little more presentable. That's all.
Yeah, good advice. Appreciate it. Thank you. Back to you, John.
Thank you, Gabe. You know, I like to point out something that you had pointed out also. We had talked about, but this is something that was enacted through the Obama administration.
That's correct.
And I know there's been a few, myself included, that thought that he came through and really did not substantially do much for our community while he was in there. It wasn't until afterwards that I got to see a lot of the things that he enacted, that some of these things came through in the latter years of his administration. And some of these things came afterwards, that I began to see and understand that he did understand that there was a platform, or in a sense a wall, that prevented us from being able to do certain things. And he presented and created those platforms to enable us to be able to do it. We have to understand what those things are and then be able to enact upon it. So this is part of the reason why we're doing this. I have another question from Everard Davis. Everard, welcome.
Yeah, hi.
How are you doing today?
I'm doing well, thanks a lot. I have, and thanks a lot, Charles, for, I missed the very first few minutes of it, but, and John, you did answer 2 of my questions. The question that I have now is, what's the general or the average expectation? And if you can give them some sort of insight on what that expectation might be for their return of their investments as well, time-wise or what have you.
Whose investment? The general public, the person who invests?
Yeah, the general public. What type, if they're going to be an investor and they're going to come on board, what type of return do you think that they're going to be looking for? What's the average that you think terms they'll be looking for, or time expectation? Yearly?
There's
3 years?
There's no real average. I would say this, that if a person was investing in an equity crowdfund company, they would want to be able to see some kind of return on their investment probably after 3 years. You would really only have to show that within that 3 years, they did better than if they put the money in the bank. one of the main reasons that you go this route as well is because you're looking for investors who are not necessarily just interested in how much money they're going to make on that particular investment, but they want to see what you're doing prosper. So if I could just give an example, the Black farmers recently have been in the news because of the way that their loan forgiveness program was interrupted by a group of white farmers who claimed that it was reverse discrimination. And one of the things about that is that the Black farmers are already suffering tremendously from historical systemic racism that was preventing them from taking advantage of many programs and advantages that white farmers had always taken for granted. So understandably, as part of the general narrative of Black discrimination and disenfranchisement in this country, people are interested in seeing the Black farmers survive. They want to see them prosper. They don't want to see them as an extinct species that they just read about in the history books about that used to exist but doesn't anymore. So if you have a Black farmer who's got a farm that's relatively well managed and has great potential for increased revenue and growth, then, you know, if that farmer wants to offer his shares, that person who invests is not just looking to get their money back in 3 years to say, oh, I made a lot of money, but they'll say, no, I've invested in Black farmers so that they will continue. Now, the Black farmer, in order to make that a worthy investment and show people, more people, that that was worthwhile, will want to do the best they can to be profitable so that they can give dividends. A dividend is a payment based on the number of shares that you have. A lot of times people have just a few shares and say GE will give a 1 cent dividend for every share. So, I mean, a person has 100 shares and they get $1 from GE. Well, they're all happy because they got that dollar. The Black farmer can do the same thing. Whatever his financial projections and eventual earning gross income for that year will allow for, he can issue dividends. So a person feels, oh, this was worthwhile, I got something. If the person sees that the company is genuinely trying to make a profit over the next few years, and on these ALF exchanges that I was talking about, where these crowdfunded shares are traded, they can find probably that their $100 in 3 years is now worth $300. Well, that's a great increase in the value of that share during that time. And they're happy to get it. They're happy that while they were able to keep that money in the coffers of the Black farmer was able to utilize it to increase their value. And that investor feels, I have helped Black farmers to survive. So when you do equity crowdfunding, you're really trying to not only get people to invest because you have a good investment vehicle, that's very important, maybe first and foremost, but they'll also be interested in what they're investing in. So you have a great chance, once you get that investor, to keep that investor and get that investor to give you other investors. That's the other thing about it. That person knows other people that think like them. And they say, yeah, I'm helping to keep the Black farmers in business. I invested in this farm and I just got a note from them, because you keep in touch with these investors, you let them know what you're doing. I just got a note from them that they expanded their acreage under cultivation by, X%, and that they expect to have a robust harvest this year because of whatever factors are at play. That next person that they are talking to says, oh, that's interesting. How do I do that? How do I get involved? They tell them how to get in touch with the company. Either the company is prepared to sell them shares, or they wait till the next round of funding and they go up and they invest themselves. And perhaps they invest more than the person they talk to. But you've got all these people advancing your program, all these people talking well about you, all these people who are excited to invest with you, so that the next time you need to raise capital, you can go to them directly. You've got contact with them. They're already a shareholder. You send them a certificate. They're very proud to have a share certificate and the whole nine, because they're participating in capitalism as it is, as we see it all the time. It's just that my example being Black farmers are not on the Dow.
That's excellent. That's excellent. One of the things that has stood out to me in this is the opportunity that is available for us to be able to raise capital. And so one of the things that you said earlier was that, you know, you really don't have to have been in business. So in this area, is it safe to say that a lot of this is based off of public confidence in what you have out there and what you show that you're able to do?
Yes, yes, very much so. And because you're going through the internet, as you see things now being advertised and made viral and formatted, let's call it, profiled, that's what you will do. Okay, so that people have a clear idea of what you're trying to do, what you've been doing in the past, and how you can go forward with the capital that you will raise through them. And so now you're actually doing more than you could have done, say, 10, 15 years ago, definitely, in terms of the visual impact that you can make. It's not just going to be as it was, where you would send out a offering circular with a little prospectus of what your shares were going to do, buy, what rights the purchaser had. You'll be able to give them a visual that you can update. You can give them continual updates of what's going on. You can really pitch to them why they should make the investment, and then afterwards why it was a good investment, and that they should keep on investing, and they should tell other people why they should be investing, and when's the next time they're going to be able to invest. You know, we plan on having another round of share issue maybe next year or a year after, whatever. So yeah, you want to keep a good public profile in order to basically maintain your capital reservoir, the place where you go first to go and get capital. So you're not thinking about going to the bank. You're not thinking about getting venture capitalists. I got, you know, on my Facebook that I'm maintaining, plus my website, if you have one, and other things, I'm maintaining a group of potential investors that is numbers in the hundreds, maybe thousands. And I'm constantly allowing them to have insight into what I'm doing. And then when I'm ready to raise capital, I'm going to do this equity crowdfunding, put the offer up on a platform, and direct everybody up there. Okay, it's time to get involved again. We're moving forward.
Excellent, excellent. I know I had a couple people I was hoping to hear from, Tamika or Joe Tutt. Joe's one of our farmers in Texas. One of the areas.
How you doing, Joe? I'm down here in Houston.
You got to come off mute, Joe, if you can. He might be driving.
I think he's on a car.
Yeah. So, Tamika, did you have anything?
Hey guys, thanks. This was an amazing presentation, and crowdfunding is something that's not new to me, but it is a very interesting way, especially with the Jobs Act, in which to raise money. You can go all the way through Series F. So this was a really timely conversation. So given some of the things you've explained, and of course, I know John has kind of raised the concept of farmers doing this. Do you recommend that, you know, farmers, as they're thinking about doing this, they think about it in a cooperative way? Could a cooperative come to the floor and say, hey, we're going to would like to raise money, and this is what that ROI is going to be for the investor?
Mhm,
Or do you
absolutely.
suggest potentially individual and kind of the approach that you just laid out for the team?
I think in the case of farmers, the cooperative approach may be the best one, because each of them would have something individual to add to the cooperative effort. And together, and in doing this, you would create another company that would have all of these disparate farmers as shareholders of that company.
Mm-hmm.
Together, they would have a business plan, which,
Sure.
you know, said that we were going to do this, that, or whatever. And you have, say, financial projections based on what each individual farmer had been doing over the last little bit. So this farmer is going to contribute this to the program. This farmer is contributing that. They have their individuals. So we know collectively that they'll be able to reach their projected financial forecasts. That is going to look more attractive as an equity crowdfunding entity, because it's got more people on board who have, you know, more at stake in order to make it successful, and
Right.
And redundant in terms of management. So it's not like if one person goes down, we have a big problem. You know, you've got a lot of people who have an interest in making that a success. And I think something along those lines, probably for the farmers, would be the best way to go. And even for projects that they may have. I mean, I was talking to somebody today, and they were talking about how down in Houston, they only have a couple of rice, what do you call it? Where they take the husk off the rice, mill.
So manufacturing, yeah, a mill.
Yeah,
Yes,
rice
sir.
mill.
Yes, sir.
And I said, well, which one of these is owned by a black rice farmer? And he said, none. So if you wanted to, say, for instance, compete against what looks like little or no competition right now, black farmers could get together, organize how they would, you know, raise capital, or the capital they raise, use it to institute another rice mill, and maybe have in that agenda the ability to bring in rice cultivated from other farmers, and then compete with the existing rice mill on price, delivery, whatever, you know, basis that you want to. And in that way, as you say, through a collective effort, start to horizontally integrate. Sorry, that would be vertically integrate.
Vertically integrate. Yeah. No, like that. So to recap, a cooperative is good because it shows multiple streams of income, or when in business we call them verticals, right? So multiple verticals by which the company can earn money from, a redundant board. So there's a lot of vested interest in being successful. Right. And then as we look at, let's say, manufacturing and processing, and we don't have cattle farmers on here, but I know there are some that are also into livestock, and there's some hurdles with the livestock processing as well. I do some cotton, we're seeing the same thing. So it might be of interest to think collectively how we come and approach the manufacturing issue when it relates to the processing of the goods. The value addition is what we would call it. Okay.
Yes, value
Thank
added.
you so much.
And the distribution would also be in that mix, because you want to make sure that your distribution to wholesalers was also covered by the cooperative as a way of ensuring that your projected financial income was accurate.
Looks like we have some other conversations to then have. My mind is going crazy. Thank you so much. I really appreciate your time. Great information, sir.
All right. Joe, you able to jump on yet? Joe says he's a cattle rancher.
Oh, okay.
Yeah, I had a problem with my sound, so
Well,
I had to go out and come back in. Yeah, I had to go out and come back in.
All right. Do you have any questions?
No, not really. I'm not a big fan of investors in agriculture, because with the beef, we're already getting jacked around with our feeder cattle, where they pay us $700 a calf. I can easily feed them out, but then they sell beef on the rail at $7,000 for 2 sides of beef. I mean, it's a tenfold markup.
For you or for the person you sell to?
For the packer.
For the packer. Have you ever thought about exporting?
No, I've got one grocery store customer where we'll feed the steers out ourselves, and then we have a processor lined up because we wanted to keep it in the family, so we have a processor, and I requested that he be USDA certified, and so he's in the process of getting his certification because I want that grade on my beef. I know what cows I'm buying, what breed, heterosis to cross, and what type of bull to give me a certain meat quality grade. And so I had one individual, and that's all he saw was the margin on my produce, but he didn't understand that the major issue for me is labor. Now I have some workers now, but beforehand that he got kind of greedy, so I'm not a big fan of it, to be honest.
Yeah, well, and I think that's part of what Charles is saying in these opportunities. You set the parameters of what the profit margin is for the investor and things of that nature. Is not so much that they come in and try to get greedy and things of that nature and tell you what to do and things of that nature. And it gives you more options. But yeah, all right. Well,
okay.
Thank you. I'm gonna check with the one last person, and if we don't have anybody else, then we'll go ahead and close out. I want to be respectful of everyone's time. Someone I know that has helped me in my investments over the past 20, 30 years or so. TJ, don't know if you're able to get on and ask anything, but if you have any questions that you like, we're more than happy to hear from you. And looks like we may have lost Charles. Is he gone? I think he is.
He'll probably try to join back on.
Yeah, I'm sure. Let's see. So we are having severe thunderstorms, internet trying to come back up. Okay, so just got a text from him. I thought I heard a boom earlier. So while we're waiting on him, just wanted to ask and the general question. We'll give him a few minutes, and if he's not, we'll go ahead and close out. What do you guys think thus far of his presentation and about crowdfunding?
It's a good way to raise much needed capital instead of dealing with the farm service or a bank.
Yeah. Yeah.
Yeah, I agree.
Yeah. So it has a lot of good upsides. One of the good upsides that, I've been looking at as far as this is concerned over the years is that it gives us as a people an opportunity. If anybody is familiar with Dr. Claude Anderson and his books, Powernomics and a few other books that talk about how we as a people can be able to do a few things. That was one of the things that he spoke about that he tried to do with, he was the one that brought in Red Lobster, trying to get that into the Black community for people to be able to do that. Charles, you're on mute right now. Glad to have you back though.
I'm sorry about that. We got a severe thunderstorm going on right here.
Okay.
And let me see if I can get my video going. There we go.
All right. All right. And as I was saying about Dr. Claude Anderson speaking about that, that was one of the reasons why they held him back on putting things together, was that they had this clause that Charles was talking about, that you had to be a certain type of investor, and that they considered the Black community, an unaccredited investor, and so they could not go and do these types of programs back at that time. So this is why it's beneficial for us today. It gives us those opportunities to do it. I was asking TJ if he had anything that he wanted to share or any questions he may have had.
I just wanted to say to Mr. Joe Tutt, I know that you wanted to sell domestically, but had you ever thought about exporting beef? Because there are a lot of foreign markets that, you know, you could get quite a high price for beef. You know, you've got a lot of catering, restaurant chains in Europe and other places where you could probably sell beef. You've got a potential halal market in the Middle East if you got an imam to come on your property and, you know, say prayers over the slaughter and supervise it.
We actually have a young man we're getting ready to send. Once the A&M, once the pandemic is over with, we're going to send him down to A&M with the meat science program through our organization, the Texas Small Farmers and Ranchers, CBO, to go through the meat processing course, to go ahead and dress and carve or cut and the various cuts. So he'll be educated in that aspect of it. And I want to make sure I say this correctly. Well, his daughter speaks Hebrew, so he says a specific prayer and he wants to process it with faith guidance or faith requirements. There's another brother in Houston that's a Muslim, and I was telling him, when you're speaking to those who might be a little squeamish on the verbiage, another way you could use, a couple words you could use is a harvesting or processing of the beef. And that way it takes away the unsavory words of slaughter or kill or butcher. You can say harvest and process. And so he was talking about going to Africa, but I got to tell you the truth. When I see him jack up Andrea Mitchell in Africa, I'm like, what you think they're going to do when they see my big behind over there?
Well, I mean, it depends. Right now, it depends on where you go in Africa. I mean, you take, for instance, Ghana. They've got a lot of Black Americans in Ghana right now. In fact, you can apply for citizenship in Ghana just because you are Black American, permanent residency and then citizenship. So that is a good potential market for halal beef, which is you know, been blessed by an imam in the slaughter process, or harvesting process.
I'll put my contact information. We can discuss it further because we're looking for another place to feed them out. We've already priced some automatic feeders. Typically, at the big lots, they feed them under the mixer, blow up the corn, the mix, get the little arm down the concrete bunks, and then feed them 3 times a day. I'm an accountant during the week, and my ranch manager is heavy equipment, so we decided to price the automatic feeder to feed them feed 3 times a day. And they put the hay in with it because that sweet feed is what gets them, so we know they're going to eat it. But I'd love to look at the opportunity besides just having a grocery store that just opened up in the food desert in Dallas.
Okay. Well, like I said, go ahead. Go ahead.
Yeah, Charles, if I may add, Joe, I go through and have been going through the continent, many different countries for different reasons, of course, for probably well over 20 years. And every African-American, you're all welcome there. Your resources, your expertise, your expandabilities. It's not just what you hear that CNN and everybody else tells you about. I can promise you one thing for sure. Many of the countries I go out there deep out into the bush, they need your services. They need you to be duplicated 10 times over. But until we get beyond thinking that it's the boogeyman, I mean, just to go 1 or 2 states or across from you, or even in your own state, there are circumstances that are even worse than what you would get your experiences over there. So trust and believe me. I've been to the continent 50, 60 times and will continue to go. COVID has slowed me down, but all your services and everything that we do are welcome there. And the exchange services to learn what they grow and how they feed and how they operate, it's there. It's all there.
So, would there be a source where we can look at exporting laws? And I know they bring in Mexican beef and the Packers, and they put part of the USA. So
Charles knows all this.
Yeah, I can give you information. If you want to export beef, it really depends on which region. It's the laws and regulations of the area that you want to export to, so that you can adhere to what their, health standards are, feed and so forth. And then also, if you want to export back to Mexico or Canada, we now have the new trade agreement that was signed between those countries that replaced NAFTA. So I can give you information on that.
All right. And Joe, I just put Charles's phone number and stuff
I see it. Yes.
in the chat again. So we have any other last questions? If not, I want to thank everybody for the opportunity to get on and to share. I want to thank Charles. You brought a wealth of information and knowledge, and I deeply appreciate it, because like I said, more than anything else, I want them to be well informed of what these things are, to be able to open up minds and give them opportunities to think about how these things can be beneficial, and then see how it is that we can move forward in some of these areas. So I appreciate what you're doing. We will be in contact. As you can see, Queen Tamika has already said, I don't know if she unmuted herself and wants to say anything else at the end, but just want to thank you for your time. Do you have any more contact information that you would like to share? If you can, put it in the chat so everybody can be able to record it. We have your number in there, your phone number. Didn't know if you had an email or website or anything else that you would like to share. Queen Tamika?
Oh, no, I just was going to say thank you. And I just wanted to echo Brother Everard's comments regarding Africa. I do a lot of work, especially on the western half of Africa. And, we need to get over that mindset. There's AGOA, there's Africa Free Trade Agreement. Depending on where you import or export at, costs are going to be very minimal if you go up and through Canada or Mexico. So yeah, our counterparts have taken advantage of it. And so don't let the mindset hurdle us. There's ample opportunity between exchange between us and Africa, trade, value, and resources. So I really appreciate the conversation, and I'm looking forward to connecting. Charles, thank you so much for the information.
No, thank you very much for having me on and listening to what I had to say. I really do believe this is a great opportunity for raising capital, and at the same time building your consumer base, building your customer base, and keeping in touch with them, and pulling yourself away from all of the traditional hurdles of raising capital that seem to stifle our businesses. And so many people talked about investing in Black business, having our dollars turn many times within our community. Well, this is a way to do it, because if people are investing in your company, it's providing services and goods to the community, and then people hear about it and want to invest more. Well, then now you are doing exactly that. You're circulating your dollars and your investment capital through your community, and you're continuing to provide more and more services. I mean, just in this meeting, we heard about a few possibilities that are open and out there if we pursue them. So thank you very much for having me.
All right. Well, thank everybody for the opportunity.
What state are you in?
Right now, I'm in Houston, Texas.
Oh, you're just down the road.
Yep, I'm here.
Okay.
I'm talking about you and Gitmo.
Before the pandemic, I was going back and forth between here and New York. But right now, my wife is very happy that I'm around more. So I'm in Houston, and I go to New York less, only maybe once every 2 months.
We'll be selling college in Houston.
You are? You're going to be serving college down here?
Yeah, Gitmo Farms and Joe College.
Oh, okay. Well, I'm interested in contacting other farmers in this area for sure. I want to see if there's any way that with the corporate and international trade, contacts that I have, I can help them to overcome some hurdles they may have, increase their business. So please, if you can, put them in touch with me. Did my email just go over? I'm having so much trouble because of the storm.
Let me check the chat. I didn't see anything come in.
Oh, okay. No, I don't think.
But what I have your emails. That's the one that I've been using, correct?
You can use that one. Just use that one, and I'm going to tell you why. I'll send you my law firm email.
Okay.
But I usually use that for business between attorneys when I have lawsuits going on. I use the Gmail account because it has a much bigger attachment potential. It's much easier for me to make big attachments in Gmail. But I'm going to send you my whittierlaw.international email. So
is that the one that you prefer me to use? Because I will make a copy of this. We put this on our Zoom thing. We put it in our Facebook and send it out to all of our members and stuff. And I will make sure that whichever email that you want will be listed in the.
Well, maybe we could do it this way. I'll give you my law firm email, and anybody seeking legal advice should contact me through that email. Anybody who wants a further explanation of any business questions or opportunities should hit the Gmail.
Okay.
Maybe do it that way.
Sounds great. Sounds great. Well, I appreciate you once again, and thanks everybody for showing up. Look forward to seeing you guys again. And thanks again.
All right, John. Thank you.
All right. All right.
Good night, everyone.
All right. Peace.
Bye, everyone. Peace.